Good afternoon, tackle traders, and hello, YouTube. This is Frank coming to you with another market recap, this time for August 6th. We are on a Monday, just getting the week started. Figured we'd maybe start out today taking a little peek at the S&P 500, where we are in the world of earnings. The blue-ish that you see here, these companies have reported. The pinkish companies are yet to report. So as we kind of talked about last week, by the time we move into the new month, there still are companies and big names, Walmart, Disney, Home Depot, just to name a few, coming up in the month of August. But the majority of our big companies have reported. I think most people will consider earnings season over. Just watch out for stragglers as we move forward. Disney does report after the market close here tomorrow. That might be a fun one to keep an eye on for sure. So we're about out of earnings. We're in a pretty quiet week in regards to news in the market as well, which is never a bad thing. So let's go ahead and take a quick look, see what's going on in our markets here today. Let's start with the Nasdaq, of course, continuing to follow through off of that bounce of the trend line, the 50-day moving average, working ever so closer to that resistance level, just sitting right on top of us. But certainly love that pattern. Love the way it developed. I love that it stopped, gave us a turnaround candle, and gave us an opportunity to potentially move in, whether you're talking individual tech stocks or the Qs or whatever it might have been. So very pretty little pullback there. Well, very well behaved pullback there on the Nasdaq this time around. On the S&P 500, another strong day in the market. Needs another strong day for the S&P 500. We're not too far away from resistance at about 2870. Closing around 2850 today. That'll be something that we'll want to keep an eye on. Of course, that is our resistance level. That's the next one. Nothing really between here and there. We've even taken out the previous swing high. So we'll want to keep an eye on that level of resistance in both the NASDAQ and the S&P 500 if we're able to work into them as we move into the rest of the week. And technically, it doesn't look like there's any reason we shouldn't be able to do that. Dow Jones kind of lagging behind a little bit, but continuing to hold its own, pushing up a little bit, holding that breakout. We did put in that swing, and so everything's looking pretty fine technically. Not a lot has changed. Things have changed a little bit on the Russell, at least in my opinion. Last week, of course, following the break of our support level and the failure of the potential cup and handle, we really struggled below the 50, below that old support level. We were actually able to close back into this old trading range today. And so that is a good step, I think, when it comes to this type of a pattern. I always will expect this old support to act as new resistance as it did. We'll have to see if it's able to continue that momentum, but definitely a little bit of a comeback for the small caps here on the right side of the 50-day moving average, closing back within that range. Again, keep an eye on that top. Again, we're a ways away until we're not, right? We're a ways away until we're there, hypothetically, in a couple of days. So be thinking about what, if anything, we might want to do if and when we challenge this resistance level yet again. Coming into our individual sectors, our friends in the material sector continue to trade within this triangle. It continues to get tighter and tighter and tighter, kind of smack dab in the middle here today on the pattern. But sooner or later, it's going to come to a decision point. We're getting awfully tight in there. We still have a little room to run back and forth. So I don't know if it even has to happen this week, but it's tightening up really good. That's for sure. On the energy side of things, kind of smack dab in the middle. I've seen a little bit of indecision over the last several days of trading on the energy ETF, pretty much about halfway from support and resistance. So pattern really has not changed. If you were a bull, you probably are still bullish. If you were a bear, you're probably still bearish. If you're like me, I'll wait till I get closer to an edge to make an opinion, or at least too strong of an opinion. Financials are interesting because we have, after failing at resistance last week, in the early part of last week, Thursday, Friday, and then into today, have really had a nice rally back up to that resistance level. This is where we want to be thinking, of course, about a potential breakout. Not saying it's going to break out. None of us will ever know it. It's not a break until it's a break, right? But we can think about, hey, what would we want to do? If this does break, is this something I'd be interested in taking? Again, one great thing that we can use these ETFs for is to kind of guide us into what we might want to be looking for. Yeah, you know what, if financials break, I might be interested in going into the financial sector. Maybe for me, that means trading directly into the XLF ETF. Maybe it means going into my watch list, looking at the financial stocks that I like to follow, seeing which one kind of lines up best, or maybe even doing some scanning and seeing if I can find something within that sector. So again, I talk about this a lot because I believe in it a lot. We can do a lot of preparation. If XLF never breaks out, we're at a little bit of time, but it was fun, right? We're traders. We're supposed to enjoy doing some charting. At least I think so. So obviously keep an eye on that level of resistance. On the flip side, don't just assume it's going to break. It's been causing us a lot of problems. So if it causes us more problems, no logical trader should be terribly surprised, right? We struggled there many times before. If we struggle there again, not that big of a surprise. At least it shouldn't be. Industrials, kind of earlier in the process technically than the financials, but we have put in that swing low and seen a little bit of upward movement working back into that resistance. I think both of these are very important places to note, both this swing low and obviously the resistance level that we've been struggling with, because one of those two things is going to probably be in play in the not terribly distant future. So keep an eye on those levels. That would be my thought when it comes to industrials. Of course, tech continues to be strong as the Nasdaq continues to be strong. It's an awful lot like the Nasdaq, as it usually does. Our old friends in the staples sector just continue to do what they've been doing for months, and that's just keeping grinding up. Anything might get in their way. It's always a short-term thing. You continue to push up, and it doesn't seem to matter what gets in their way. Moving average, resistance, doesn't matter. So they continue their nice grind to the upside, very strong area. Utilities, interestingly, actually broke out and closed above that resistance level that we've been kind of looking at over the last little while. Don't love the candle. Not a lot of exciting, that's not a very bullish candle, but we did close. So we can kind of keep an eye on that as a potential breakout within that sector, because a close is a close. Might not like the candle enough to want to do anything with it, but I have to recognize we did in fact close above that resistance, and that is a bullish signal. Maybe not enough for me to get into a trade. Maybe, I don't know. That's up for us all to decide for ourselves. But very interesting that we're able to push through that resistance and actually get a clean close. Healthcare continues to be very strong, continuing that upward grind towards that high there in the low 90s. Been pretty easy on traders, other than one kind of uncomfortable day. Really, ever since this breakout, it's pretty much been either flat or bullish, and so that's always a good thing. At least if you're a bull, right? It's a good thing. And of course, in our discretionary, kind of seen some follow through off of the test of the 50-day moving average we saw last week. So pretty strong day overall in the market. Most things had a pretty good day. Real estate to close us out, much like utilities, although they did break and cleanly close above resistance to close last week, we're able to hold that breakout for yet another day. So keep an eye on that old resistance to act as a potential level of support if we do end up testing it. So that's where we find ourselves in our overall sectors. Crude and natural gas had an okay day. Crude, keep an eye on 70. Crude ran right up just shy of 70 today and did an about face. And I know a lot of traders, I know Matt has been looking at 70. A lot of people have. No surprise that it has a nice bullish candle to get the day going, gets to 70, and we have a pretty good little intraday pullback. So overall, we still remain in a bullish position, but 70 is something that we got to keep an eye on clearly. And if you didn't believe it before today, I think today gives you enough evidence to suggest that we gotta keep an eye on that. Natural gas continues its strong upward move, so we're doing all right there within the energy sector. The dollar is right on the top end of that trading range. I think super aggressive traders might even argue that it's broken out to the upside. I don't think I would make that argument personally, but we're pretty darn close. We're right there on that top end. So kind of keep an eye on that as a potential break. And again, anytime we're talking about potential breaks, we also have to flip it on its head and a potential knockdown from resistance, right? but very interesting location when it comes to our dollar. That's for sure. Another rough day in the world of metals, as is the norm nowadays. Silver down and gold down as well, as we kind of work towards what it appears the trading community, the investing community, however you want to word it, really kind of have 1200 in their sights. We have had some history there in the past from a longer term point of view at that 1200. So that is understandable. It's certainly a nice round psychological number. But right or wrong, it seems like that's really the area that traders are looking at as a potential for, or at least a short-term level of support. I don't necessarily disagree, but it would have to look pretty darn nice for me to trust that 12, at least until something changes technically. So nothing has changed in the world of metals as we continue that downward slide that we've been on for quite some time. So that is where we find ourselves in our commodities, in our sectors. Pretty light on the earnings front, as we can kind of tell just looking at what's happened and who's yet to report. So no real big name companies coming out tonight or tomorrow morning. Obviously Disney, pretty good sized company tomorrow after the close. Of course, make sure you are checking any of the stocks that you're potentially trading or that you have open trades on to make sure that earnings date is behind you, or you are prepared for it if it is yet to come. With that, ladies and gentlemen, this has been the market wrap up. As always, I certainly appreciate everybody's time. It is my pleasure. If you haven't already, go ahead and hit the subscribe and the notification button so you can be alerted anytime we add new videos, whether it's live streams or how-to instructional videos, market wrap-ups. Hit that notification button so you can be aware. If you enjoyed the market wrap-up, always helpful and appreciated if you give us a thumbs up to let us know we're on the right track. With that, happy trading each and every one of you, and I will see you in the next one.